foregstrategy.com.
Hello again, this is Chris looking at the upcoming Wednesday, September 10th trading session. In front of you is the economic calendar as per, and you can see the first announcement coming out is the French non-farm payrolls anticipated for last quarter to add 0.1%. A good indication why the euro is weakening. We think that less than ideal numbers could put pressure on the euro, but what we would be really interested in is if we get some type of pop in this number, an unexpected addition. If we get that, we are buying puts to sell off on any short-term rallies. A few other things coming out of Europe and Norway specifically, probably nothing to move the markets. Crude oil inventories could have an effect on the oil markets in the United States, light sweet crude market, so we could watch that. Really, a lot of what's going to happen in the day is backloaded. So we have the New Zealand interest rate decision. The decision in itself isn't really a concern here. There's, unless you happen to have the ability to trade the Kiwi dollar, it's probably not going to affect you. But rate statements, monetary policy statements, these things matter because central bankers are listened to. So if the New Zealand Central Bank says, for example, that they are concerned about global growth, you can bet your bottom dollar that people are going to pay attention. So that could be a real sell risk asset type of situation. After that, we have the Australians releasing their employment numbers, 12,000 added, 6.3% unemployment rate. This is a regional number. Look for it to affect the Aussie dollar in and of itself, and that's probably it. But with that, let's take a look at some charts. Okay, everybody's favorite trade at the moment is the euro, and people are buying puts, selling it off. Looks like we're going to get a little bit of a pop here. I still believe that 130 is massive resistance. So quite frankly, any type of resistive candle a little bit higher from here gets my attention. It has me buying puts almost immediately. Here is another currency that is the absolute epitome of struggling. This is a British pound. It's just falling apart. We tried to rally during the session on Tuesday, formed a shooting star, which suggests continuation. We still think 160 is the level that is going to target, but that being said, it's way overdue for a bounce. So really would like to let the market come back to me, start buying puts at a higher level, and then start selling again, aiming for the aforementioned 160. Looking at the DAX, you can see we formed a little bit of a hammer here. It does look like at the end of the day we are drifting a little bit lower, so the market looks like it could sell off a little bit, but we think 9,600 euros will offer support. So a nice pullback gets us excited, has us start buying the DAX. Looking at the S&P 500, we continue to meander between 1990 and 2010. The closer we get to 1990, the more interested we are in buying short-term calls as we continue to bang around in this area before we make a move higher. We are really pretty confident about that being the case, but there's just nothing to really get the markets moving at the moment. And finally, you can see that oil markets fell, but we continue to see a bit of support here. Somewhere closer to the 92-ish area. So with that, we do think that this announcement could give us a little bit of a pop, but quite frankly, we're willing to wait till we get it closer to 95, 96 or so to start selling. In other words, buying puts, as we think the downward pressure will continue. And with that, I've taken a look at the Wednesday, September 10th trading session.